Stocks Market Minute for Tuesday, August 11th. This is a fractal chart of GLD, or the ETF for gold, and we've seen a little bit of a bounce over the last few days, but let's not get too excited just yet. Gold may have a little ways to go. Let's pull out the monthly chart for more of a perspective on where support could be, and we might see some pivot support here at about 100. And below that, we have much deeper levels of support, maybe around $70 per share. So you can see that gold has really been in a bear market since the latter part of 2012 when that major lower high set up on the monthly chart. And it's been down ever since that point. So we have to use the monthly chart for kind of context as far as what's going on here, because the larger time frames will dominate the actual trend. So we're going to see these little ripples coming back up until we start to see an actual reversal. And what that reversal is going to look like initially, there's going to be a lot of starts and stops on this. And it's going to be very frustrating if you're a gold bull to pick up on these, because what you're going to see is violent rallies higher, okay? And that's just going to be retesting levels like this from below, and it's going to roll over again. So the dominant trend is still going to be pulling this thing to the downside until we start to see an actual reversal. And that actual reversal is going to be most importantly found on the weekly trend for right now. So we might have something like this going on in the daily chart where we have a higher low, higher high. What that's going to do is that's going to be pulling up the weekly chart like this, and it's going to be important that we get above some of these levels of overhead resistance like 110, right? So what's going to be important is that the weekly chart also starts to put in a series of higher highs and higher lows and starts to change that polarity. Now what will happen from there is that'll start to pull up the monthly chart. Now gold will not truly bottom until the monthly chart puts in the same thing, which is going to be a higher low followed by a higher high. And we're going to start to see that change in polarity and perhaps a very quick transition into a bull. But we have to let this all play out. If you understand how this plays out across the different time frames, you're not down here trying to pick a bottom and disappointed when this rolls over again. So if you keep everything in context, if you know where things are happening on the weekly chart, on the monthly chart, then you can understand the context of what's happening, and you can be much more proactive, and you don't get your fingers cut trying to catch this falling knife, which is on the daily chart. Now, on a shorter term perspective, what you can do is you can look for something like this where we do see that retest of 110 from below, and that might be an excellent area to sell something where we're setting up either a bear put spread, which would be my preference because the volatility will be crushed by the time that the price gets up to 110, or will at least be significantly lower than it is right now. Or you can also set up a bear call spread for an income play. That's it for today's Market Minute. Thanks for listening, folks. We'll see you tomorrow.